Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are here with Adrian Day Asset Management. Adrian, thank you for coming.
Well, thank you, Steve, for having me. Appreciate it.
Yes, I've gotten a lot of questions since you started coming on the show of what you're like in person, and I always describe you as the perfect English gentleman.
Well, thank you.
All right, I got to sit through your speech that you did. It was awesome. Maybe you can kind of summarize a bit of that. Basically, it was why is gold moved and the gold stocks haven't?
Right, and I'll try to be concise. The main reason, there's two main reasons. The main reason is who has been buying gold and why have they been buying it over the last 2.5 years. So from the bottom in September, October 2022, the gold market has been driven by global central banks buying gold. Then at the beginning of last year, we saw Chinese buying pick up dramatically. And then we also saw buying from wealthy Middle Eastern and Asian families. All of those groups are buying for their own reasons, but it's important. All of those reasons are unconnected with what's happening in the U.S. jobs numbers, and whether U.S. interest rates are positive or negative. Central banks are buying, as we know, to diversify their holdings away from the dollar because of weaponization of the dollar. So they are not concerned about what's happening in the U.S. And they are not going to buy Newmont Mining for their reserves, let alone Ajax exploration. A Chinese retail investor who's worried about the value of the yuan, the fragility of the banks, wants to put their money somewhere where it's safe. Again, that person is not going to buy Newmont Mining, let alone Ajax exploration. And again, the wealthy families that are wanting to preserve wealth in the face of global debt, well, the conclusion is the same. And so the reasons that gold have been going up over the last 2.5 years are different from the reasons why gold normally moves. They're not connected with the macroeconomic environment. And if you look at the macroeconomic environment in North America, on the surface, we have a strong economy, bad for gold. We have inflation come down and sort of low, negative for gold. We have real interest rates that are positive, negative for gold. We have a strong dollar, negative for gold. And we have a strong stock market, negative for gold stocks and gold. And so it's not illogical that gold is going up, but gold stocks are lagging. Now, gold stocks have still gone up last year. It's not as though they've been a total disaster.
Yeah.
I was just looking at the numbers. Over the last 12 months, the XAU is up 30%. I mean, we shouldn't cry in our milk over 30%. But it's not the kind of leverage we expect.
Yeah, in the past, the gold bull markets, if gold may go up 10%, but the gold stocks go up 70 or something ridiculous.
That's right. But we're only just beginning to see the sort of macro environment that is positive, traditionally has been positive for gold. And I think we've probably got a few more months of weakness, frankly.
Okay.
Because with the new administration in the U.S., there's optimism on the economy, there's optimism on inflation, there's optimism on the stock market. So I think it might be a few more months before we see interest in gold. I mean, at the moment, Steve, as you know, we're always talking to gold investors, right?
Yeah.
But if you get out into the real world, it's not that the family office in Miami or the mutual fund that does value stocks or whatever, it's not that they've looked at gold stocks and decided not to buy them. They're just not looking at gold stocks. They are simply not interested. And when is that going to change, to preempt your next question? I mean, I think the stock market, the broad stock market rolling over is when investors, and I'm not talking about retail investors, but investors, institutions, funds, start to saying, oh, where should we move our money into? Let's get out of NVIDIA and Apple and Microsoft, and now where do we put it? And that's when some of that money is going to start flowing to gold.
Okay. Okay. So central banks have been buying. According to your presentation, 2022, it was like 1,100 tons. 2023 was 1,000 tons. 2024 was 600 tons. We also had a lot of buying out of Asia, especially China, for retail.
No, I'm sorry.
Nope.
2024, that's December, 600 tons.
Oh, just December?
Yeah.
Oh, wow.
Yeah.
Okay. Oh, that's
Sorry.
Okay. News stories have generally been bad for gold. These believe the job numbers or not, the job number reports have been bad for gold. And also the DXY, the dollar has been moving up. Now this one's interesting. I did not see that happening, but really when you think about the DXY, it's compared to 6 other currencies, and those currencies or those central banks have been cutting more.
Sure.
Bet is so that would make sense.
And their economies are weaker.
Yeah.
Are you going to move from the dollar into the euro or the Canadian dollar?
No.
Or the British pound?
No.
So, yeah.
Yeah. You gotta move into the dollar.
Yeah.
I was talking with another trader and he mentioned that that's his trade so far is they're just in the dollar. And he said it's kind of boring, but it's doing better than everything else. Well, maybe you got a point. Okay. You also mentioned that some of the tailwinds for gold was we've got 36 trillion and counting debt. And then when you count in unfunded liabilities, we're up at like 150 or 200, depending on who you ask. So that's a big tailwind for gold. Right.
Yeah. And that's not going to change radically.
And the inflation you mentioned was, you called it, I wrote sticky. Oh, you called it stubborn.
Yeah.
Stubborn, sticky inflation, right? And what was really interesting about that no one really takes into context is it's compounding.
Absolutely.
The, what do they call it? The 8th wonder of the world?
Yep. And so that's why I showed that graph of the dollar over the last 4 years. Not a political statement, but over the time that Biden has been in office, the dollar's lost 22% of its net purchasing power.
Yeah.
Because it compounds every year.
Yeah. Yeah. Only making it worse.
And wages for the average worker have not gone up by 22%.
True.
So the average worker is falling behind.
Yes. Yeah. Now, what was really interesting to me was when you put the total market cap of gold was 14 trillion. And the market cap of Google, Amazon, NVIDIA, Microsoft, and Apple combined is 15.1 billion?
Trillion.
Trillion.
Yeah.
Yeah. So actually, those 5 companies combined is more than the market, than all the gold,
value.
The value of all the gold mined forever.
In history.
In
Absolutely. It's staggering. And so those 5 companies, excuse me, those 5 companies have a market cap of 15.1 trillion. The 100 largest gold mining companies have a market cap of a little over 400 million. So, just astonishing. And the industry well enough. When you get down to number 97 and 98 and 99, we're getting to some pretty small companies.
Yeah.
We're looking at companies sub 50 million market cap.
Yeah. Yeah.
People don't realize that.
A lot of them in this room.
Yeah. We're getting down to some pretty small companies. So, but the top 100 mining companies are a fraction of what 5 US companies are. Now, what that means, there's 2 things you can draw from that. One is, and we know this, but one is that the gold market is a very, very small market.
Yeah.
The second thing you might infer is that gold is cheap relative to the tech stocks that have driven the market. That's another thing you might infer. And the other thing you might infer is the average gold exposure of North American investors is less than 0.5%. And 70% of investors own less than 1% exposure to gold, according to Bank of America. You might also infer, right, add all that together, small market, undervalued, if the exposure goes back to even half of what the longer-term average is, which is 2%. So even if it goes back to 1%, that's a doubling from here.
Yeah.
With a small market cap of gold stocks, the leverage is phenomenal.
Yeah. I was watching an interview by one of the members of the Gold Council, and he said it was closer to 30 basis points instead of half of 1%. I'm like, wow, that's from our point of view, I guess.
Yeah, yeah.
And I'm a bit of a technical analyst, so when I look at those top 5 stocks that Google, Amazon, Nvidia, Microsoft, and Apple, it really looks like a topping pattern to me that is starting to round over.
Well, Apple and Microsoft in particular.
Yeah, yeah.
Uh,
They really look like they're starting to just crest right now and start to roll over. So,
and of course, that sort of thing compounds on itself, because if I've owned Apple for 10 years,
yeah,
I'm so proud of myself. I'm so happy. I'm so rich. But if I still own the Apple stock and I start to see it roll over like that, I'm going to think, maybe I should lighten up to preserve my profits.
yeah. True. Is your highest conviction bet for 2025 gold?
For 2025, I think gold stocks.
Gold stocks. Okay.
Yeah, but I think we're going to have a couple of months more of weakness because of the optimism on the U.S. economy.
Okay.
I don't think the reality of the economy is going to show through for a few more months.
Okay. There's still a lot of optimism around the Doge committee.
Yeah.
Okay.
Yeah.
What level could you see it pull back to? I see a lot of support around the 2350 to 2450 range. Is
You're talking gold.
I'm talking gold. Yeah.
Yeah, but with due respect, I think what you've just talked about, Doge and Trump, that's got nothing to do with where gold is.
Okay.
So I don't see gold pulling back. I don't see gold pulling back much below, 25, frankly.
Okay.
I really don't.
Okay.
Maybe 2450. You're the technical analyst.
Yeah.
But I just don't see it, because who's been buying gold and why they've been buying gold, the reasons for them to buy gold still remain.
Yeah.
And so you look at central banks who want to diversify their reserves because of the weaponization of the dollar. When President Trump, God bless him, when President Trump says anyone who dares to move away from the dollar, we're going to impose 100% tariffs on them. Well, does that make the president of Brazil say, oh my gosh, we're so sorry, Mr. Trump, we didn't mean to upset you. We'll sell all our gold and buy dollars? No, of course it doesn't.
No.
It makes them want to step up their diversification away from the dollar.
Yeah.
So the reasons that these people have been buying gold haven't gone away.
Yeah. Okay. So if your highest conviction bet is gold stocks, are you, if you had to pick one major, which major would you pick?
Well, I think Franco-Nevada actually is a very good buy here.
Okay.
At maybe 18 months, but Cobre Panama is going to come back.
Oh, that's good news.
Whether it's under First Quantum or under someone else, it's going to come back. And if First Quantum decides to sell that to Barrick or whatever, the stream will go with that sale. The only time it wouldn't go with it is if the government of Panama confiscated the mine, and gave it to Chinese.
Yeah.
Then the stream wouldn't carry on. So I think at some point, Franco's stream on Cobre Panama will come back.
Okay.
That was 19% of their revenue. They've written it off completely, so there's no value in the stock for Cobre Panama right now. And apart from that, they've got other new streams coming on, and they've got $1.4 billion in cash, so they're not going anywhere.
Okay.
Okay. So that would be my number one among the seniors, I think.
Okay. That's awesome news, because we all bought in when it got down to 103, 104, and the waterfall sell-off.
Yeah.
It was completely overdone. And I had actually kind of written off Cobre Panama, but you fully see that coming back online.
Oh, I think so at some point. But okay, so Panama needs it.
Yeah.
It's their second largest source of revenue.
Yeah.
And the government has just shut off their second largest source of revenue.
Yeah.
They've got a massive budget deficit. They've got a funding gap in their retirement, their Social Security, their retirement program.
Yeah.
They need that to come back, let alone the employment.
Yeah.
Outside the canal, it was the largest employer in the country. So they've just got to manage the opposition, which is partly environmental, partly just a sort of we don't like mining by foreigners, and partly, frankly, because they thought First Quantum had a sweetheart deal.
Okay.
So they've just got to get over that. But here's the beautiful thing. Well, the beautiful thing about royalties, which but if First Quantum re-enters negotiations with the Panama government, which the government says they're going to do sometime this year, and First Quantum is going to have to make concessions. They're going to have to get the government, even if the government, is sort of on their side, they're going to have to make concessions so they can sell it to the public. Franco-Nevada gets the stream back.
Yeah.
Franco-Nevada doesn't have to say, well, we'll cut our stream by 20%.
Yeah. Yeah. Yeah.
So, I think the mine's coming back. It may be next year, beginning of next year, but it'll come back.
Okay. But Franco-Nevada is not a sell. Okay.
No.
Okay. Okay, so that's your favorite big one. We're at the BRIC. What is your favorite junior that you're eyeing right now?
Oh, do I have to answer that? There's several that I like, and I'm always nervous with juniors because things can change so dramatically.
So quickly, yes.
And people will come up to me in 3 years' time and say, you told me to buy Ajax, and look what happened. Whereas I'm not worried about Franco.
Yeah.
Or Inigo over that time frame.
Yeah.
We're still buying Origin. Origin is a royalty generator, which has that big royalty on, to remind people, the big royalty on Silicon Merlin in Nevada, owned by Anglo.
Yeah.
And they are looking to monetize that asset.
Yeah.
So I think that's one that I like. And I like it because I think there's essentially no downside. And you can't really say that about too many juniors.
Yeah.
Right? I'm not looking for the stock to double or even go up 50%, but it's certainly not going to double when they sell the asset. But it's a more modest return with virtually no risk. So that'll work. I think Metalla among the smaller royalties is very, very inexpensive.
Okay.
It's very inexpensive. It's not inexpensive on a cash flow basis, but it is remarkably inexpensive on an asset basis. Probably selling at around 40% of its NAV, which is significant discount to even junior royalty companies.
Yeah.
And that's because most of their assets are further out. So you look at Taca Taca, which is a huge copper mine in Argentina, First Quantum owns that. That may not come on stream till about 33, 34.
Okay.
2033, 2034. So the market's not really focused on that at the moment. But on an asset basis, very cheap. And for investors, you don't have to wait till 2023 till it comes on stream. As each year goes by, this mine does a feasibility. This mine gets a permit. This mine decides to, makes a go-ahead decision.
Yeah.
So all of those milestones will be reflected as we move forward, will be reflected in Metalla's stock price even before they begin to generate revenue.
Okay. They have a lot of copper in them too.
Well, their growth, their NAV is about 30% copper.
Yeah.
But if you look at the big long life mines, like Taca Taca, probably a 30 or 40 year mine life. Copper World, which is Hut Bay, that's another multi-decade mine. And so over time, if nothing else happens, then yes, the copper becomes much more dominant.
Yeah.
But right now it's about 30% of their NAV.
Okay. Awesome. Got a couple of names out of you. Thank you, sir. What any new news on Altius with regard to Origin?
Well, yes. I mean, since we last talked, the arbitration, which we were waiting for, the arbitrators made a decision, and the decision was a split decision. To be honest with you, I think they acted more as though they were mediators trying to keep everybody happy rather than as arbitrators who are supposed to decide on the facts of the case.
Okay.
That's a personal opinion, but I don't mind sharing it. So, but the good news is Altius, their claim on Silicon Merlin was confirmed. Now, it would have been a shock if it hadn't been,
Yeah.
but it was confirmed. But more importantly, they were awarded the area of interest around Silicon Merlin. That's very, very important because that's where all the ounces are, and that's where the real growth is. Because their central royalty actually cut off a sliver of Merlin.
Yeah.
But now they've been confirmed, awarded, they have the area of interest around. So all that thousands of meters of drilling that we talked about on the west,
Yeah.
that Alberto Calderon, the CEO of Anglo, described as very significant. They haven't put results out, but he said it was very significant. Well, you don't do 35 drill holes unless if they're all dry.
Yeah.
And you certainly don't call them very significant if they're all dry. So all of that is now included in Altius. So the good news is that even though Altius lost the Bullfrog deposit, North Bullfrog deposit to the north, which was the first mine to come in, lower grade, but the first one to come in, and they lost some other low deposit. Even though they lost a couple of known deposits, the really central critical thing is that they got the area of interest around Silicon Merlin, which is where the real value is. And that's what, Franco or Wheaton or Cisco, or Wheaton's not interested, as far as I know. But that's what Royal or Cisco or Franco, that's what they're going to be buying.
Yeah, that's what they're going to buy.
And so that's the big news. And now Altius is moving ahead with the process. Anglo is coming out with an update in the second week of February. So I suspect that now that the arbitration is over, well, why wouldn't they actually announce some of the resources that they have but haven't yet announced? Well, that's what I'm hoping for.
Yeah.
I would say we know it's not, they're not going to go backwards.
Yeah.
What they announced in February is not going to be worse than we already know.
Yeah.
It may be a lot better or a little bit better, but it's not going to be worse.
Okay.
And this is a deposit that's just going to keep on growing.
Yeah.
I wouldn't be surprised if Altius does not get the bits that they want and decides to keep it. That's just me.
Okay.
That's not the company talking, that's me. But I wouldn't be surprised at all. Because this is a very, very valuable deposit that's going to continue growing. So if you sell it now, Franco is going to give you a little bit for upside, but they're not going to pay you what you think you're going to get in 20 or 30 years.
Okay.
Right?
Okay.
And so I wouldn't be surprised if they decide to keep it. We'll see. Origin, on the other hand, is probably more likely to sell their royalty, just because their 1% royalty is just so much more meaningful for the company.
Yeah.
Altius could keep Silicon and it would be 30% of Altius.
Yeah.
Origin keeps Silicon and it's 90%.
90% or something.
So I suspect they're going to sell it, and shareholders will do well.
Okay. And then we'll have Ermitaño and a lot of
And then we'll have everything else. Ermitaño, the cash,
Yeah.
plus some other pretty attractive properties. They've got a nice property in Colombia that they don't talk about. They've got an exploration joint venture alliance with Altius in Nevada, looking for silicon analogs. They've just been awarded an exploration budget by BHP. BHP had a competition. Sorry, I forget the name of it, but a competition for North American explorers to become venture partners. Several hundred applied, and they awarded 7. Origin is one of them. So Origin's going to get funding to do exploration in Western United States.
Okay.
So yeah, no, there's a lot going on. There's a lot going on with Altius.
Okay. Awesome.
With the margin.
With Origin.
Yeah.
Yeah. Okay. You're also an instructor in the Rule Classroom.
Yes.
That's been a lot of fun. We've been talking about an options class coming up. Do we have one on the books for that yet?
Well, it's scheduled.
Is it?
Well, scheduled.
Okay.
I simply have to prepare it.
Okay.
It's the next one. Oh gosh. If I knew you were asking, I would have looked.
Yes.
What's the last Wednesday in January? Is it the 31st?
Well, I don't know. I'm going to have tech support look that up right now.
Okay. But it's the next rule classroom that I do, which I think is the last Wednesday of January.
Okay.
And I'm supposed to be doing options.
Okay. All right. Well, remember, it's the 29th. Okay. There we go. We'll hold you to it, Adrian.
Okay.
Looking forward to it. If viewers want to, do you have any final thoughts?
No, just that, the stocks are remarkably undervalued, and the big cap stocks, although everything we hear about is negative, Marley stealing Barrick's gold and, this and B2 having an overrun and cutting their dividend and blah, blah, blah. But the stocks are doing well. The big cap stocks are doing well.
Yeah.
The margins are expanding. The free cash flow is growing. The stocks are doing well. And, I think and they're very, very undervalued and underowned. So I think we just have to buy them and be patient.
Okay. All right. Patience is the name of the game. Adrian, thank you very much. Join us for the options class in the rule classroom. Link will be down below. And if viewers want to get in touch with you, follow your work, how can they do so?
Yeah, adrianday.com.
adrianday.com. Adrian, thank you very much.
Thank you so much.
Always a pleasure. And thank you for tuning in. Be sure to support the show and share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we'll talk to you next time.